Hi everyone, my name is Toby Thorne. I'm a senior manager in our VAT team at James Cooper Creston. This is the next instalment of our Tax in 10 series covering various hot topics in VAT. In this video, I will be covering postponed accounting for import VAT, sometimes referred to as postponed VAT accounting or PVA. So, what is postponed accounting? It was introduced on the 1st of January 2021 in line with the end of the Brexit transition period. This is because post-Brexit, VAT has become payable on imports coming into the UK from anywhere in the world, which now includes imports from the EU. Postponed accounting is a system which aims to avoid the negative cash flow impact on businesses that are now hit by this additional VAT bill, and will also avoid having goods held in customs until the VAT is paid. The way it works is very similar to the EC acquisition system that was used for EU trade prior to Brexit, in that rather than physically paying import VAT and then reclaiming it on a subsequent VAT return, the VAT is accounted for as input and output VAT on the same return. So for businesses with full input tax recovery, the net effect on the VAT return will be nil. And so the eventual outcome for the importer is the same, but they have avoided having to physically make the import VAT payment. Do you need to use postponed accounting? No. The use of the system is completely optional. So if you wish, you can still use the old system and pay the VAT up front when the goods enter free circulation in the UK, be it at the port of entry, for example, or after release from a customs warehouse. The old system will require you to continue to obtain monthly C79 certificates from HMRC, which are still physically sent in the post, and then you recover the import VAT paid via your VAT return. Whereas the new PVA system has monthly import VAT statements which can be accessed online. So this is one benefit the new PVA system has over the old system. Another is that import VAT deferment accounts are no longer required. So if you currently have one of these, or if you pay to use a freight forwarder's import VAT deferment account, you no longer need to if you use postponed accounting. So this is a potential cost saving for some businesses. However, importers may still want their own deferment account number for excise duty or customs duty, and therefore continue to make use of duty deferment accounts going forward, as duty deferment accounts and import VAT deferment accounts are two separate things. So who can use postponed accounting? So the system can be used by all UK VAT registered businesses, that is both those established in the UK and non-established businesses. We have had experience with some confusion around this, with some freight forwarders saying it's not possible to apply PVA for non-established businesses, but that is not the case. All UK VAT registered businesses can use postponed accounting. We have also had it where some clients have been told that they need to apply to use PVA, but again, this is incorrect. There is no application process. You simply need to inform your freight forwarder that you wish to use postponed accounting. Businesses in Northern Ireland will continue to be considered part of the EU VAT area, so goods arriving from the EU will not be considered imports and will therefore not incur import VAT. So there is no import VAT to postpone on these movements of goods. However, businesses in Northern Ireland can still use postponed accounting for imports from non-EU countries. So how does it work? As I mentioned previously, the first step is that you need to inform all your freight forwarders that you wish to operate postponed accounting. If you have more than one freight forwarder, you need to be sure that you inform all of them. Otherwise, you could end up having some import VAT postponed and some not, which is messy and less efficient. As I also mentioned earlier, the VAT return adjustment itself is very similar to the EC acquisition method that was used for EU trade prior to Brexit. So box 1, which is your output VAT, you would enter the total amount of postponed VAT in the period. Box 4, which is input VAT, you would enter again the total amount of postponed VAT in the period. And then box 7, which is your net purchases, you would include the total value of all imported goods in the period. Since the introduction of making tax digital, these values can't be manually adjusted on the VAT return box if MTD applies to you, and therefore must be recorded in the main record keeping software. Therefore, how you enter this adjustment or make this adjustment to your VAT return will depend on your accounting software. I know that Xero, for example, has a PVA button on the VAT return page, which you simply enter the postponed VAT amount and it makes the necessary adjustments to the VAT return. Other software packages may have a similar solution, or if not, you may need to enter a manual journal. Or of course, if MTD doesn't apply to you, you can simply adjust your VAT return boxes. So to summarise, postponed accounting is intended to bring relief to businesses by having a positive impact on their cash flow. And having advised clients on this over the past 9 months or so, it definitely achieves this. It is also simple to use and should mean that most businesses that trade with the EU are unimpacted by Brexit in respect of VAT. I suppose there is a slight change to the VAT processing, but it is no more complicated than what was in place pre-Brexit for the movement of goods within the EU. So overall, there are no negatives when it comes to making use of postponed VAT accounting. So there can be few objections, if any, within most businesses. And that's why we're encouraging our clients to take full advantage of this postponed accounting system. Thank you very much for listening. If you have any questions or are in any doubt about whether postponed accounting is right for your business, please do get in touch and we can talk you through it. My contact details are on screen now. Keep an eye out for our next Tax in 10 episode, which will be released shortly. Thank you and goodbye.